Let's take it back here to the Asia Pac, and Shanghai's city investment arm is selling non-core businesses in a bid to raise nearly $400 million. Bloomberg's Zeb Eckhart joins us live now here in Hong Kong with that story. And Zeb, are they hitting up the stock markets like everyone else these days?
You know, Susan, they want to focus on their core assets. So what are they selling? Well, they're selling stakes in a dairy maker as well as China's largest chip maker, hoping to free up money for its core investments. Now, Shanghai Industrial selling a 30% stake in the Shanghai-listed Bright Dairy and Food Company, and that may generate $227 million in profit. And it's also unloading an 8% stake in Semiconductor Manufacturing International. That is China's largest chip maker, and that sale may raise $142 million. Now, both of these companies posted full-year losses last year, and these asset sales may help speed up income growth at Shanghai Industrial. The stock yesterday rallied nearly 5% on the news, and year-to-date, those Hong Kong-listed shares up over 100%. There you see around 110%. And now there's an interesting backstory here. Bright Dairy was caught up in last year's tainted milk scandal in China. Sales fell 10% after the company recalled milk products that were contaminated with melamine. And of course, melamine is an industrial chemical that sickened hundreds of thousands of kids there in China. Bright Dairy's first quarter profit fell 92%, and Shanghai Industrial saying selling a stake in the dairy makes sense because it is a non-core business. So what is Shanghai Industrial planning to do with this extra cash? Well, the company plans to boost investment in real estate projects in Shanghai as well as toll roads. And Susan, definitely a reason for investors to continue playing those infrastructure plays in China. Shanghai Industrial obviously interested in doing just that.
Toll roads, you see how Sichuan Expressway did yesterday.
Yeah,
200% in its trading debut. We were expecting maybe a 40% pop at the start. That's exactly what analysts were expecting, but well and above expectations. And that's exactly what we're going to move on to. Let's check in on shares of Sichuan Expressway on day 2 on the Shanghai Exchange. Of course, this is the toll road company. And let's check on shares today. Not doing as well as it did yesterday when it gained over 200%. Today it's down 10%, and Sichuan Express was the first new Shanghai share listing since August. And we have one tomorrow, a mammoth one. China State Construction Engineering starts trading in Shanghai, and this company raised $7 billion in the world's biggest IPO in 16 months. A ticker number for you is 601668CH, and we'll be tracking the gains for you tomorrow on the Bloomberg Edge, so don't miss it. Now let's stay in China, and another Chinese company at Chinese internet giant Sohu. Sales are rising. It reported second quarter revenue of $127 million. That's a 25% increase from a year ago. And a forecast the sales will be as much as $137.5 million next period. Profit fell by almost a quarter to $31 million, though that beat analyst estimates of $28 million. Its shares did fall more than 7% overnight in the U.S. They are still up for the year by about a quarter, but they trail Chinese rivals Baidu and also Sina.com. Baidu, of course, is China's biggest search engine. It is way out in front with gains of 170%. Baidu expects their revenue to reach a record high this quarter. Some pretty impressive numbers.